Hello again. Thanks for watching. This week, I'm going to get into some very interesting historical data and reports from the 70s and how it compares to now. Now is actually worse than it was then. But first, I want to get into some data and just some more blind bidding stuff that really irks me. And I'm going to start with this one here. So this was a listing. One of my clients actually called me on it. They wanted to see it. I said, okay, let's slow down here. This is not what they want to sell it for. They're going to sell for much higher. Obviously, I said they might as well just price this at $1. It's listed at $199,999. It's not going to sell anywhere close to that. You might as well just list it for $1. So then I actually did check the listing. It was only in the market a few days, and they did have it listed for $1, which kind of proved my point, or it did prove my point. So then my client says, well, what do you think it's going to sell for? I said, let me do some research. And I said, it's probably going to be 500,000-600,000, who knows, something like that. At that point, they decided, yeah, what's the point in seeing it? It's not going to sell anywhere close to this. And again, I don't know if the agent just did this because they didn't know the prices in this area. And they said, let's just put it low. And who knows, it kind of saves them having to do the background work on this and research. But the buyer's agent or the buyer, they're going to have to do the research to know what it's worth, so they're not overpaying. So anyway, this brings me to my point that, and a lot of people in the comments say this too, that, blind bidding should be illegal, right? This is like an auction process now, and with no information on the price. So you're bidding against these other people, and you don't know what they're bidding. So who knows what could happen? And it's not in the best interest of anybody but the seller. So the market is heavily favoring the seller in the situation. Nobody knows what they're buying or what price they're paying. And then you have listing agents coming back and asking for more money, even though they have, what they want or more than they want, but they're, coming back with these strategies. It's just a really bad situation. And if you think about it, I'd like someone to tell me what other thing in this society or in this country do consumers buy where you go in blind bidding like this? Like I've been thinking and I can't think of anything. Like everything has open bidding, right? All auctions, cars, you go to the dealership. There's actually rules in place that if you go into a store and something's marked wrong, you get it for that price. Like if it's on the wrong shelf and whatnot, and the price is underneath it. So real estate seems to be the only thing, and it's the most expensive thing that these rules apply to. And this is the rules that allow it, right? These are the rules that allow blind bidding because we have to protect the privacy of the offer and all the rest of the stuff. So that's my 2 cents on it. I think we should ban blind bidding. It has driven up prices more than they've already gone up and more than they should have gone up. And it is not in the consumer's best interest. It's only in the haves, not the have-nots' best interest. Moving on to some bank sale info. So bank sales in the ITSO area, the 20 boards surrounding the GTA, have significantly increased in last week's data. You can see here on the chart, they started to tick up in February and March, and then they kind of dropped back off. And you see here in June, last week, June 4th, the week of June 4th, now still very low, only 38 units or something on these bank sales on MLS right now. But it is a substantial increase from all the previous weeks. Now, I just started tracking TRREB because I just got access last week, so I don't have the data from the prior weeks because they don't provide that data. This is very specific data I'm searching. But I do have some other info based on their 94 active bank and power of sales listings right now. So you're looking at this chart, you can see that 85% of all the power of sale type listings are alternative and private lenders, and only 15% are the big 6 Canadian banks. And then out of those listings, 60% are detached, 16% are apartment condos, another 8.5% are towns and semis, and 1.1% multifamily. And then the one that got me was, I didn't expect it, was the vacant land. The vacant land is almost 14% of all listings, which when I thought about it kind of makes sense because there's a lot of private lending or private mortgages taken out on land because typically you can't finance with big banks. Moving on to this little history lesson, and this all starts with a report from CMHC. This report was from 1978. And it is the evaluation of the Federal Housing Action Program, which was implemented in 1976 and 1977. And this is kind of looking back to see how that plan worked and how their housing supports for Canadians help them. The thing that I find interesting about this report is we are in the exact same situation that they were in back then, but our situation is actually a lot worse. It's almost like twice as bad as it was. So let's get into the kind of the summary, and I've summarized this whole document for you. The link is in the description, and you can download it yourself and read it. And then we're going to get into some data comparing 1970s affordability or lack of affordability to today's. Housing problems facing Canadians in 1975 and beyond. The Federal Housing Action Program was conceived in 1975. The overall objective of the program was to tackle a number of important housing problems facing Canadians. And these problems were insufficient production of moderately priced housing, affordability problems faced by prospective homeowners, excessive demand for higher priced housing, lack of incentives for the construction of rental accommodation. So again, very similar to right now, affordability in those moderately priced homes or lack of supply for them. And they had a very similar issue back then. The rental issue is also very similar, where people aren't building purpose-built rental units because it's just too unaffordable. It's not worth your time. It's a lot easier now just to do pre-sale for condos and sell a bunch of units, keep the cash in your bank until you're ready to build. The problem concerning supply and price had two facets. First, in 1975, it seemed unlikely that production to 1979 would keep pace with projected needs. Production, both public and private, reached a level of 231,500 units in 1975. Over the following 4 years, it was calculated that a further 1 million units would be required. So very similar to today, all the politicians are calling for more units to be built, millions of them by a certain date. And looking at the housing starts, when you compare then to now, they completed 231,000 units in 1975, and we completed just around 260,000 last year. Related to the question of supply was the fact that units being produced for ownership were increasingly produced beyond the means of even moderate income Canadians. And we see that all over right now. Like they build houses, say in my area, and these homes are $1 million plus. And like average wages, even anywhere in Canada, the average wage cannot support that. So you have these units that, yes, they're being built, and they talk about supply. And I say, you can increase supply, but if all the homes are $1 million in my area, it won't matter. We need more affordable units, 600,000-700,000 at the most. Second, the supply problem in the rental sector was particularly acute, with production decreasing dramatically and vacancy rates of less than 2% in most Canadian cities. So this is exactly the same problem we have now. We have the latest data from CMHC for 2022, and we have a vacancy rate of 1.9% in the major metropolitan areas. The affordability problem also has two components. Increasing construction costs, compounded by increased interest rates, had placed homeownership beyond the reach of many families. And every week I get emails and messages about this same situation, how they feel they'll never be able to afford a home. Second, rental entrepreneurs were faced with a rapidly growing deficit between the cost of building and operating rental units and the rent which could be charged. Combined with rent controls across Canada, this factor discouraged investment in new rental accommodation. Well, I think that ship has sailed a long time ago in Canada. Like, people don't build rental units near as much as they did in the last 10, 20 years. So now let's look at the data and compare it to today. Taking a look at the price of homes from 1957 to 1976, it went from $14,000 to $37,000. And these are new homes, by the way. These are not resales or just average prices. But anyway, they went, 2.5 times, more than double in that almost 20-year span. And they have the interest rates in the next column and so on. And you can see the real cost of home ownership went from 26.26, so 26% of the average income or average wages and salaries, and it went up to 35% in 1976. And this was what was alarming, and this was the reason for this program. I've added in the household income to the average home price ratio. How much more is a home than the average annual wages? This actually went down. It was 4 times in 1957, and it went down to 3.2 times in 1976. But because of the higher interest rates, the carrying costs were higher, which put the real cost of ownership at that 35% of wages. Now I've added in our data at the bottom, and it just shows how kind of like screwed we are nowadays, which it's not really funny, but it is a joke at the same time, that we've let it get this out of hand. So I've added in a few years here. I went from 2007, 2012, 2020, and 2023, and you can see the interest rates there. And looking at the middle column, the principal and interest payments. Now, these were all done with 10% down, just like they had seemed to do on that previous chart from the 70s. It looked like they used a 10% down on the mortgage costs. So in 2007, your principal and interest payments were just under $20,000. And this was before the great financial crisis. In 2012, which would have been considered a downtime, it was a little bit less than that because interest rates had dropped and prices really didn't skyrocket that much. And it was under, it was $18,500. 2020 it went up pretty significantly to $26,000 per year. And then now in 2023, it has increased significantly to $43,500. And it's a combination of house prices and interest rates. Looking at the real cost of ownership there, the second column from the right, you can see in 07, we were higher than they were in 1976, which is okay because that was in a very hot market and prices were inflated then. So we'll say that's okay. And then it went down to 0.33 or 33% of the wages. And of course, 2020, it's almost 40%. And now look, it's like pushing 60% of the annual income for the average price in Canada. And of course, moving on to the last column, house prices, even in 2007 in Canada, the average was around 6 times the average income. 2012 didn't get much better. 2020, we got up to 8% almost, and we're at 9% now. So you can see how extreme today is compared to any of these years or these decades before. And it really goes to show you how serious of a problem housing is. And when people say house prices, they're going to keep going up. Look, there's immigration. It can't, right? We're in a crisis and an affordability crisis. And I just don't see that it can keep going up without, again, I've talked about this before. You can have civil unrest, increased crime. Why would people work anymore when they can't afford a house? And the last chart on this report was the trends in costs for revenues for new rental housing. So I've underlined just a few key points here. The median capital cost per unit in 1970 was $14,000. In 6 years later, it was almost double, $26,200. But if you go to the middle column, the payments on it did increase more than 2 times from 1970 to 1976. And then we have an index. So the baseline is 100%, I guess you could say, in 1970 for the principal and interest payments and the index of rent. So you can see the index, the payments went up, the second last column, they went from 100 to 206. So they went up 106% in that 6-year period, whereas the rent that was collected on those units only went up 56%. So it wasn't worth building rental units at this point because, again, prices had gone 2 times, more than 2 times, and rent had only gone up 50%. So yeah, I thought that was some pretty interesting history and kind of puts us into perspective where we are compared with their crisis back then. And our crisis now is like magnitudes bigger than it was back in the 70s. Lastly, I want to leave you with one of my favorite comments, kind of puts, again, this whole topic into perspective from one of the YouTube viewers, Nicholas Claremont. I'm a millennial who has a decent paying job in Victoria, BC. I can maybe buy a house in my lifetime. The generation after me, Gen Z, has absolutely no hope in ever buying a house in this province and possibly in this country. I am so ashamed that this is happening in our country and an entire generation who are being excluded from living a normal life and having meaningful investment in a first world country. So I wanted to read that one because that really summed up the situation for too many Canadians of certain generations, of that generation especially, and how they can't, they have no hope. They can't afford a house. And it's never been like that in my life. You want to buy a house, you buy a house. But now it's like some distant dream. And I thought Nicholas there, he summed it up very well. Anyway, that's it for this week, and I'll see you next time.